Hello everyone. Thank you for tuning in to this presentation. My name is Fatih and I'm with Lala and Naura. And today I will be discussing the financial performance of two Indonesian public energy companies. The first one is PT Perusahaan Gas Negara Tbk or Pegas, and the second one is PT Super Energi Tbk or SURE. Both of these companies play an important role in Indonesia's energy sector, but their financial performance and investing potential tell very different stories. Over the course of this presentation, we'll talk through their background, financial ratios, performance comparison, and finally provide a recommendation for investors. So let's get started. So we move on to the purpose of this video. There are two purposes in this video. The first one is to compare Pegas and SURE in terms of their profitability, liquidity, and efficiency, and also solvency over the past 6 years. The second one is to give a clear recommendation for investors, especially those who are considering long-term investments in the Indonesian energy sector. By analyzing both companies side by side, we aim to answer this question: which company offers greater stability and long-term growth for investors?
Okay, me and Chikawa are going to explain about the company overview with Pegas and SURE. Let's start with Pegas first. So, Pegas is Indonesia's largest natural gas distributor with more than 32,000 kilometers of pipeline infrastructure. It has been operating for decades and is now part of Pertamina as Indonesia's state-owned oil and gas holding company. So, financially, Pegas has shown relatively stable growth. From 2019 to 2024, revenues constantly increased, while its return on assets rose from 1.53% in 2019 to 6.85% in 2024. Its return on equity also strengthened, climbing to nearly 12% by 2024. Liquidity-wise, Pegas maintained a healthy current ratio above 1, showing it can comfortably pay off its short-term obligations. Its debt-to-equity ratio declines steadily, proving that the company has been reducing reliance on debt and managing risk well. So, in summary, Pegas has a track record of financial stability, efficient operations, and prudent debt management, making it attractive for conservative investors. Now let's move on to SURE. SURE is a younger company, established in 2011 and listed on the stock exchange in 2018. It focuses on liquefied petroleum gas, or gas LPG, and flare gas utilization. While its role in expanding energy access is important, its financial health tells a different story. From 2019 to 2024, SURE showed very unstable results. Its return on assets and return on equity have mostly been negative. For instance, ROE dropped dramatically to minus 58% in 2024, highlighting major struggles in generating value for shareholders. Liquidity ratios fluctuated wildly, while sometimes excessively high, sometimes dangerously low, showing poor consistency in managing working capital. Its debt-to-equity ratio in 2024 spiked to 3.11, signaling heavy dependence on debt and higher financial risk. While SURE has achieved revenue growth and market capitalization gains, These improvements are overshadowed by recurring losses, poor profitability, and weak asset efficiency. Overall, the company presents a high risk profile.
And now let's talk about comparison of key ratios. To put things in perspective, let's directly compare the two companies across the four major financial dimensions. The first one is profitability. Pegas consistently generates positive profits with ROA and ROE trending upward. Sure, on the other hand, posted mostly negative results, reflecting operational inefficiencies and losses. The second one is liquidity. Pegas maintains stable current, quick, and cash ratio, showing balanced liquidity management. Sure's ratio fluctuated sharply, sometimes showing excess cash, sometimes showing severe shortage. The third one is asset efficiency. Pegas asset turnover ratio improved over time, meaning it generates more revenue per unit of asset. Sure's efficiency declines, signaling weaker use of its resources. The last one is solvency. Pegas gradually reduced its debt reliance, strengthening long-term stability, while Sure's leverage remained inconsistent and risky, with high debt exposure in recent years. Well, clearly, Pegas consistently outperforms Sure in almost all critical aspects of financial health. And now we will give recommendation for long-term investors. Coming from questions, which company is better for long-term investors? Based on the data and analysis, the recommendations is Pegas. Why? That's because Pegas demonstrates consistent profitability, strong liquidity and cash flow, effective asset management, and a conservative capital structure. This quality makes Pegas a stable and reliable choice for investors seeking sustainable returns and lower risk. On the other hand, while Sure may attract speculative investors who are willing to take risk on its growth potential, its recurring losses, unstable liquidity, and high leverage make it unsuitable for conservative and long-term investors.
The last part of this video is to conclude. Pegas and Sure may both operate in Indonesia's energy sector, but they represent very different investment profiles. For Pegas, it stands out as a stable, resilient, and efficient company with a long-term outlook. In contrast, Sure remains volatile, burdened by debt, and financially inconsistent. Therefore, our final recommendation is Pegas is the better option for long-term investors, while Sure remains a high-risk choice that requires major improvements before becoming attractive for stable investments. Thank you for watching this presentation. I hope this analysis helps in making informed investment decisions. Thank you.